This is Horizons Middle East and Africa, our top stories this morning. Stocks in Asia gain for a third day after bullish momentum lifts Wall Street, indicating a Santa rally may be taking hold. Gold sets its 50th daily record this year as traders bet on more US rate cuts as well as escalating geopolitical tensions. And US President Donald Trump is warning Venezuela's Nicolas Maduro not to play tough, while vowing to keep oil seized from a supertanker. It's just gone 9 a.m. across the Emirates, 5 a.m. here in London. I'm Lizzie Burden in for Jemana Basechi. Welcome to the programme, everybody. Happy Tuesday. And we have got the signs of that Santa rally beginning. It's a shorter trading week than usual, notably, and it started with gains for stocks. So equities erasing their December losses. The S&P up for an 8th straight month, the longest winning streak now since 2018. But as you can see, for now, we've got futures pretty flat on both sides of the Atlantic. Already, though, gains in the Asia session of about 0.5%. But flip the board over to the cross-asset picture. And as I say, we've got gold at a new record, the 50th record-breaking day this year, in fact. Oil there pretty steady, Brent at $61 a barrel, the US 10-year yield at 4.15 and euro-dollar at a 1.17 handle. Just staying in the markets for a moment, we'll get to Asia, but I want to bring you a chart on gold because, as I say, it's been hitting a fresh record. You can see here the rally tracking US debt and gold keeping rallying really regardless of risk appetite changes or risk-free rates. It's looking increasingly like a vote on the viability of US debt repayment, you might say. So central bank gold buying being very closely watched for that same reason. Just going back to Europe, and we've got breaking lines across the terminal. We have the latest new car registrations numbers out of Europe, and they're ticking up for a 5th straight month in November. It puts the region on course for a 4th year of gains. These numbers, of course, from the European Automobile Manufacturers Association. Car sales rising 2.4% to 1.08 million. So driven by growth across electric models, Spain and Germany recording the biggest gains. It's actually France and the UK posting slight declines here, but we shall keep an eye on the European car makers at the cash open. Let's turn now to Min Min Lo. She's in Hong Kong with an update on Asia markets. Min Min, over to you.
Hey Lizzie, we are clocking a second session of gains this week on Asia Pacific stocks, but you can see the Nikkei is the outlier here. It's really been dragged down by the firmer yen. I'll get to that in a little bit, but you can see here even the Hang Seng is eking out a modest gain here, 0.1%, despite Citigroup downgrading Chinese stocks to neutral, citing a less favorable macro environment and outlook for earnings revisions as well. The TAIEX is up 0.6%, but flip the board, the main focus today has been the yen, right? Because we had the finance minister this morning giving her strongest verbal intervention yet, saying that Japan has free hand to make bold moves or bold interventions against currency speculators. So you can see we are gaining about 0.6% against the US dollar. We're watching if we cross below 156 today, that would mean that we have erased the spike after Ueda's comments last Friday post the BOJ rate hike. But here you can see Japanese yields also pointing down, just coming off from multi-decade highs, but still remaining at pretty elevated levels. The Japan 2-year yield has come off the 1.1% level now.
Min Min, thank you so much for the update. That's Min Min Lo in Hong Kong, and we'll see Min Min again later in the programme. Now let's get some analysis on these markets. I'm pleased to welcome Ayesha Tariq, co-founder of Macrovisor, who joins us now. Morning, Ayesha. Should we start with the big picture? We've got yields a little lower in Japan this morning, but the big picture is that governments, of course, have still been spending in 2025. You've got the US, Germany, Japan as well. In 2026, does that leave us with higher growth or just higher yields?
So, hi, Lizzie. Thank you for having me. So I think it's both, right? So I think this kind of spending, the fiscal impulse, it puts a floor under GDP growth. So you're going to have this liquidity in the market, and that's going to obviously boost GDP growth to a large extent. But at the same time, I think it puts a ceiling on bond prices. So we're going to see higher yields. And that's because, we need that spending to be supported. And one way to support that is obviously through issuances. And we've been seeing a lot of issuances on the front end of the curve, but we think that we're going to see more issuances gradually move out on the curve, so at the longer end.
And you say that the Fed's going to step in with quasi-QE. I wonder how that squares with an inflation fight that you also say isn't over yet.
No, it's not. And I think, this is something that we should be worried about. Most of us is worried about, the labor market right now, and rightfully so. The labor market is cooling, and that keeps the Fed on an easing bias. But I think something that may happen is that the Fed steps in quite a big way, because they've already announced something. They've started announcing purchases of T-bills. And that could lead to purchases of bonds later on if the issuance gets large enough. Mind you, we don't have a lot of buying from international players. They've actually substituted a lot of this buying for the purchases of gold, which is why you can see gold prices are, reaching all-time highs.
Yeah, you wonder what brings them back to duration if they can buy gold instead. I also wonder how the race to be the next Fed chair plays into this. If Kevin Hassett becomes the replacement for Jerome Powell, how much would that heighten Fed independence concerns? How much would it push up the Treasury risk premium?
So I think it would push up the Treasury risk premium for most of the reasons that I've cited, but also because we've already got kind of a target from Stephen Miran, right? And he said that, he's noted that he wants to see rates at 2 to 2.5%. So if that's the case, we're looking at Kevin Hassett being very dovish here. And there is a question of Fed independence, but I think it could be done in a very smooth way where he pushes towards lower rates because of a cooling labor market.
And let's say that Jerome Powell and the rest of the FOMC hold back on rate cuts in the first half of the year, knowing perhaps that there'll be a dovish Fed chair in the second half. And how disappointed would the market be? How much would that hold back US equity gains?
So I think we could still see U.S. equity gains, but I think we will see a lot more volatility in 2026. So even though they may not, cut rates immediately, we will see that impulse coming in from the bond buying, or rather the bill buying. So there will be plenty of liquidity, and that's what we had in 2025 as well. I think that ramps up in 2026 to keep conditions fairly easy for the first half.
And what do you think will be the story of AI in 2026? Will it be when the bubble bursts, or will we see a broadening out of the AI gains for other stocks?
So that's an interesting question. I don't want to call this a bubble just yet because it's still a developing story. And I think we're going to see a lot more volatility, though, for a couple of reasons. Because of all this CapEx spending, they are effectively diluting shareholders because they're using their existing cash flows. On the other hand, we're also talking about deregulation to a certain extent in the credit market. So now that the debt market has entered the chat, we become a little bit more fearful because things could go wrong very quickly over there. So that's one thing. And then on the other hand, we have competition between the companies. So Google coming out with their own specialized chips. And then we also have cannibalization from, China, because China is also looking at coming out with their own chips, their own infrastructure, heavily supported by the government. So plenty of things to consider in the AI narrative. Adoption rates are not there yet. So things are still fluid. So I don't want to call it a bubble, but we need to be cautious in 2026.
OK, interesting that it's less that you see a bubble, but more that you see cannibalization rather than a broadening out. Just finally, before we leave you, we're talking about inflation. We've got to talk about oil as a factor into that. The story of oversupply has been one that's kind of dominated in the past few months. I wonder when you see OPEC pivoting to supply cuts.
So I think the OPEC will gradually move towards tightening the supply towards the second half of the year, so possibly after summer. So if you look at demand conditions, Lizzie, we are at an all-time high for demand. Now, supply is higher than demand at the moment, but prices like this cannot go on forever. Living in the Middle East long enough, I know that at some point we're going to need a push towards slightly higher prices, and that's supported even by the American market as far as oil companies are concerned. So I'd see somewhat of a pullback in production towards the second half of the year, and oil prices floating slightly higher.
Okay, really interesting. And we're going to get another take on that later in the hour from Rachel Ziemba. But for now, Ayesha, always a pleasure to talk to you. Ayesha Tariq there, co-founder of Macrovisor. Thank you. Now, for a look at some of the other stories we're following this morning. Novo Nordisk jumped in late trade after it secured FDA approval for a pill version of its weight loss shot Wegovy. The pill is expected to launch in the US in early January. The product is crucial for Novo's strategy to take on Eli Lilly, which has said its own oral obesity drug could be approved by March. Elsewhere, Larry Ellison's providing a personal guarantee of $40 billion in equity financing for Paramount's bid for Warner Brothers Discovery. The move aims to give Paramount an advantage in a takeover battle with Netflix. The revised proposed merger agreement offers improved flexibility to Warner Brothers on debt refinancing transactions, representations, and interim operating covenants. And JP Morgan is said to be considering offering cryptocurrency trading to its institutional clients. Bloomberg has learned that the bank is assessing what products and services it could offer to expand its footprint into crypto. The move is a sign of how banks have warmed up to digital assets since a crypto-friendly administration took office. And the US Federal Communications Commission says that it'll ban most foreign-made drones and critical components for unmanned aircraft systems. The new rules apply to future imports and sales, not those already in use. The decision comes ahead of a deadline for adding Chinese drone maker DJI technology to the agency's covered entity list. Well, still ahead on the programme, President Trump warns Venezuela's Nicolas Maduro not to play tough, but keeps mum on whether he's looking to oust him. Details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in London. Now, President Trump is warning Venezuelan President Nicolas Maduro not to challenge the US. Speaking earlier, he also vowed to keep oil seized from a supertanker, but declined to say whether he's looking to oust the leader.
He can do whatever he wants. It's all right. Whatever he wants to do. If he wants to do something, if he plays tough, it'll be the last time he's ever able to play tough.
Our news desk's managing editor Jill Desis is with us for more. Morning, Jill. Just talk to us about whether President Trump's actually any closer to getting what he wants from Venezuela.
Morning, Lizzie. Well, I think at this point, obviously the extent to which the Trump administration has blockaded these vessels is still pretty significant. We're maybe not talking about earth-shattering developments in terms of how this may move oil markets, but in terms of actually crippling Venezuela's economy. This is sort of a carryover from, some sanctions that the Trump administration first pursued back in 2019 during his first term in office, and now you are really seeing a pretty massive step up. I think we've actually seen some more moderate comments from Maduro over the last 24 hours or so. So I do think that it's kind of interesting, first of all, to see Trump shift his comments here. But when you've got some other really fiery rhetoric coming from some other members of his administration, including Homeland Security Secretary Kristi Noem, talking about how Maduro needs to get out, I think that does indicate that Trump is at least willing to keep the pressure on until he sees something more significant here out of Venezuela.
And speaking of pressure, Trump's also announced a new Trump-class warship. Why is he doing that now?
Yeah, Lizzie, I think this is down to a couple of different factors. First of all, it really does play into this idea of Trump kind of bolstering, his Defense Department's capabilities. I think this would be something like the first battleship that the administration has, that the U.S. has produced since like the 1940s. They've actually focused on different classes of warships and different technologies. Trump really is kind of, trying to, first of all, he's no stranger to putting his brand all over everything, but also I think a lot of this is about, sort of bolstering that image of the Department of Defense. And then a secondary concern here is that Trump has really kind of put an emphasis on shipbuilding in the United States over his term in office this time around. I think, still, places like China, for example, still dwarf the United States in terms of how much shipbuilding capability they actually have. I think, about 53% of the world's output is from China. U.S., it's more like 0.1% or so. It's really a fraction, but it does kind of indicate that the Trump administration is really trying to put effort on sort of building on those, sort of big macho war technologies, and then also really putting that emphasis on shipbuilding.
Okay, really crucial international context. Jill, thank you so much. Bloomberg's news desk managing editor, Jill Desis there. Now, for a look at some of the other stories we're watching around the globe this morning. The US and its allies are renewing their push to hold a conference on Gaza reconstruction. Bloomberg has learned that Washington has been discussed as a potential venue for the conference that could happen as early as next month. The conference would be part of a broader effort to advance Trump's peace plan, including an international stabilization force. And Israel's cabinet has unanimously approved a proposal by Defense Minister Israel Katz to shut down Army radio. Katz said that the station's preoccupation with political content harms the Israel Defense Forces, its soldiers and its unity. Under the plan, the radio station is slated to close by the 1st of March. Well, coming up on the programme, the Fed Governor Stephen Miran has warned that the central bank risks sparking a recession unless it continues to cut rates. We'll bring you more from that interview next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in London. Now, Fed Governor Stephen Miran says that the central bank risks sparking a recession unless it continues lowering interest rates next year. He also told Bloomberg that data on housing costs was impacted by the government shutdown.
It is true that the shelter stuff was somewhat distorted by some of the quirks of recovering from the shutdown. But it's also true that the shelter data were distorted for most of the year because of really long lags with which shelter inflation is calculated. If you look at market rents, they've been running at about a 1% rate for about 2 years now, right? That's not indicative of any price pressures in housing whatsoever, but it takes a really long time for measured shelter inflation to catch up to that just because of various quirks of the statistical measurement process that I got into in my speech last week. So I do think there was maybe some downward bias in last week's print, but at the same time, there's been tons of upward bias in data for the entire year, and it's inappropriate to say, okay, well, we have to adjust for the downward bias, but we're going to accept the upward bias. That itself is a deeply biased position. We've got to be clear-eyed about both.
Well, do you feel like, and yourself included, but do you feel like members of the Fed are cherry-picking what about inflation they like or dislike?
Well, I mean, I think that for the last few months, we've had data come out in accordance with, I think, my view of the world. The inflation data have steadily come in cooler than expectations. The unemployment rate has poked up, potentially above where people thought it was going to go. And so we've had data that should push people into a dovish direction. And I think it's somewhat problematic if you see those data coming out and you don't adjust your policy prescriptions in a dovish direction. What does that say about the reactiveness of policy to the economy? I think it reflects very poorly upon the institution.
At the end of that speech at Columbia, you nodded to the fact that recessions are inevitable. Fed's job is to kind of forestall them as much as they can. Policymakers' jobs are that. I'm very curious, when you look at the labor market in particular, the rise that we've seen in the unemployment rate, that's the kind of rise we've seen customarily before recessions. How do you assess the risk of there being a recession here in the near term when you look at the labor market, for instance?
So I don't see a recession in the near term, in part because we are adjusting our policy rate by lowering it, which is appropriate. My view, as I've described, is that a variety of shocks that hit the economy, including changes to the population growth rate due to changes in the border policy, have pushed what we call the neutral rate down, and that policy needs to adjust downward to reflect that downward shift in neutral. If we don't adjust policy down, then I think that we do run risks of rising recessions. I don't think it's too late to prevent that, and so I think it's important that we keep on adjusting our policy rate down. But at the moment, it's not my base case, in part because I think that we ultimately will end up continuing to adjust interest rates down.
Fed Governor Stephen Miran speaking to Bloomberg Surveillance there. Now, for a look at some of the other stories we're following this morning. A senior Russian general has been killed after a bomb exploded in his car in Moscow. Fanil Saravov was in charge of the operational training department in the Russian general staff. Investigators have opened a murder inquiry and are looking into Ukrainian involvement as a potential theory. And Russia's liquefied natural gas exports to China surged to a record in November as buyers shrugged off the risk of Western sanctions. Deliveries more than doubled from a year earlier to 1.6 million metric tons. That means Russia is now China's second biggest LNG supplier after Qatar. And Cambodia and Thailand have agreed to meet on Wednesday to discuss conditions for a ceasefire. The decision came after foreign ministers from Southeast Asian nations met in Kuala Lumpur. At least 40 people have been killed and 500,000 displaced since hostilities resumed this month, ending a July truce that halted an earlier round of fighting. Well, just going back to the rate story, and I tip my hat to our colleague Garfield Reynolds for this chart. You can see here how 2026 may not be as dovish as expected. Disappointing Governor Miran, perhaps, and perhaps not giving equities as much of a tailwind as hoped for in 2026. For now, though, the S&P is up for an 8th straight month, and if we check in on your futures picture, we are pretty flat at the moment when it comes to the outlook for Wall Street in today's session. But going all the way back to 1950, these last 2 weeks of the year are typically the best on the calendar. So that Santa rally is a genuine tradition. It's not just wishful thinking, though. Not looking like it's going to be added to enthusiastically at the moment by the looks of the futures picture. Just flipping over to the Treasury space, and we have the yield on the 2-year down a basis point, same for the 10-year, and at the very long end, at the 30-year, we're down 2 basis points at 4.82%. Also, just checking in on your oil space, and we've got Brent this morning at $61.89 a barrel, down 0.3%. Of course, we've been weighing the geopolitical tensions around Venezuela and Ukraine, Russia, against the oversupply concerns, and indeed oil on the back foot this morning. Will the oversupply concerns continue into 2026? When is OPEC going to pivot to cutting supply? A question that we'll be discussing with Rachel Ziemba next up in the programme of Ziemba Insights, of course, as oil prices hold steady really after 4 days of gains. The US continuing its blockade of shipments of crude from Venezuela. So we'll get Rachel's insights next. Stay with us for that conversation. This is Horizons and this is Bloomberg. This is Horizons Middle East and Africa, our top stories this morning. Stocks in Asia gain for a third day after bullish momentum lifts Wall Street, indicating a Santa rally may be taking hold. And gold sets its 50th daily record this year as traders bet on more US rate cuts, as well as escalating geopolitical tensions. And US President Donald Trump is warning Venezuela's Nicolas Maduro not to play tough, while vowing to keep oil seized from a supertanker. It's just gone 9:30 a.m. across the Emirates, 5:30 a.m. here in London. I'm Lizzie Burden in for Jemana Versace, and a very good morning to you. Welcome to the programme. And I mentioned that Santa rally starting to take hold. Not a lot of enthusiasm when it comes to the futures picture this morning. We actually have S&P E-mini futures pointing south, NASDAQ futures flat to to the upside. Pretty similar here in Europe, but already seeing gains of 0.6% in the Asian equity session. We'll get to more on that with Min Lo in just a moment, but flip the board over to the cross-asset picture. And I also mentioned gold there setting a new record, its 50th record of the year. Oil pretty steady after 4 days of gains, the 10-year yield at 4.15 and euro dollar there at a 1.17 handle, up 0.1%. We've discussed with Ayesha Tariq already on this programme whether AI is going to be a bubble that bursts. Is it even a bubble in 2026? Well, on our look ahead theme, here's another chart on that. And you can see the hyperscalers are seen to spend over $500 billion in terms of capex over the next 12 months. So very much a question about whether there will be returns on that investment, whether they can return enough to justify all of that capex in 2026. Another chart from our charts team. Well, let's check in on how Asia markets are faring now. Min Lo is on standby for us in Hong Kong. Min.
Hey Lizzie, we're taking a look at the currency markets because the yen is absolutely making waves in Asia today. Take a look at this 0.7% gain against the greenback after the finance minister made her strongest verbal intervention yet, saying that Japan has free hand in making bold interventions against currency speculators. So we have broken below 156, essentially erasing the spike in the yen that we saw since last Friday after the BOJ rate hike, after Ueda's comments, which investors had interpreted as not being hawkish enough. But analysts are saying it's not just because of the finance ministry's jawboning, it's also because of the broader dollar weakness, because take a look at the euro. It's at the 117 handle now. That's lifting broader G10 currencies, Asian currencies as well, with the yuan being the vanguard here. We are inching ever so closer to that 7 per dollar level. So something to keep an eye on. And taking a look at how the yen is impacting equity markets as well. If you flip the board, and we can see the impact on the Nikkei, which is the laggard here in Asia today, down by 0.1%. Obviously, the Nikkei is an index composed of many companies that are export-driven. Topics is doing better, and of course, the banks obviously benefiting from higher rates as well. The 10-year yields coming off slightly, but still remaining pretty elevated at the 2.03% level.
All right, nice one, Min Lo in Hong Kong. Thank you so much for the update there on Asia markets. Well, we mentioned oil edging slightly lower after a 4-day run of gains as the US continues its blockade of shipments of crude from Venezuela. The US has taken control of 2 tankers and is in pursuit of a third now as Washington intensifies pressure on the government of Nicolas Maduro. Joining us for analysis across these commodity markets is Rachel Ziemba, founder of Ziemba Insights. Always good to see you, Rachel. And we'll start with oil, shall we? Because, as I say, we've got the geopolitical tensions around Russia and Venezuela kind of competing with the oversupply concerns. I wonder who wins over the next few months. What's the floor potentially for oil prices?
Yeah, great to be with you, Lizzie. In this time that's not really a holiday quiet time in the markets, or not yet. So look, I think it really depends on if the U.S. is serious about enforcement, not only about Venezuela, but also about Iran and Russia. Venezuela itself is less than 1% of global oil supplies, especially the sanctioned supplies that are going to China. But this is at a time where the Ukrainians are hitting Russian tankers, where the U.S. is sanctioning more Iranian vessels. And so if we were to see tightening of several sanctioned jurisdictions at the same time, that could definitely bring oil prices up and offset what would otherwise be a decline. As for floors, my view is that I think if we sort of got below 50, it wouldn't stay, so we're a long way from that now, but it wouldn't stay there. And that has a lot to do with the fact that China continues to add to its stockpiles, and we might well see others in that context and at lower price points. Yeah.
I mean, we were discussing with Ayesha earlier, when does OPEC pivot to cuts?
Yeah, and we might not see OPEC as a whole pivot to cut. I'm really watching Saudi Arabia, the UAE, the countries with the surplus capacity, whether they, both what price they're willing to sell at and whether we might see some tempering. We already know they announced plans not to keep adding new supplies in the first quarter of next year, right? Traditionally, a soft time in the oil markets. So I'd be watching. Also, Kazakhstan has pledged to finally do its compensation cuts next year. You can tell I'm not too optimistic that they'll actually do that, but I do think in those 50, in those sort of lower 50s or especially sub 50 range, and the U.S. producers are price sensitive as well. But overall, the markets are going into 2026 expecting a pretty big glut, and we're waiting to see whether it will actually be as big as they anticipate.
On the flip side, we've got gold hitting fresh records again this week on the geopolitics. I'm looking at it up 0.9% at $4,483 a troy ounce right now, Rachel. Is that rally going to continue into 2026?
Yeah, I think the general trend will be upward. This is, gold continues to be a way to play the weaker dollar, the lower U.S. rates. We might see some bumps along the way. It's rarely linear, but ultimately, I think we're seeing a number of institutional investors still looking to get into gold, and that might lift up some other metals, including silver. And we've definitely seen that gold as this sort of store of value really outpaces Bitcoin and other sort of digital assets in that way.
So you don't think silver's overreaching here?
Well, we'll see. I mean, I think both gold and silver look a little stretched for me in the short term. They've seen a big jump, but I think the structural driver is still supportive.
And you mentioned the weak dollar. You don't see the dollar recovering in 2026?
I think not. I think we're going to see weaker financial conditions, slightly softer U.S. economy. But, you highlighted it with Minmin a moment ago. The real question is about dollar Asia. This 2025 has been a strong year for the dollar against some G10 currencies and some emerging market currencies. But the real question is whether the Chinese are going to allow their currency to appreciate to sort of ease some of the pressure from the big trade surplus and current account surplus. They probably won't allow a lot. But I think if we see the renminbi appreciating, we might see some other Asian emerging market currencies following suit or being pushed up in that way. And then I'm also watching EM currencies that are beneficiaries of the cheaper oil prices, even places like Turkey, but also other importers like India, for example.
Okay, really interesting. Glad to get your take before we close out 2025. Rachel Ziemba there, founder of Ziemba Insights. Thank you so much. Well, let's get back to the geopolitics. Fresh clashes between the Syrian army and the US-backed group SDF have erupted in northern Syria. The clashes coincide with the visit of Turkish ministers to Syria for talks over different issues. The renewed violence could also further diminish hopes to meet a year-end deadline to integrate the armed faction into state institutions. We can get more on this now with Patrick Sykes, who's, of course, Bloomberg's breaking news editor in Istanbul. He joins us now. Patrick, how big of a threat are these clashes to Syria's stability and security?
Morning, Lizzie. Yeah, I think the real threat here is from the timing, right? You mentioned we've got that year-end deadline for the folding in, the integration of the SDF into the new national Syrian military. That was already a pretty contentious deadline. There had already been a lot of public debate about what form it might take, what it might look like. And now we're seeing the outbreak of outright violence, which I think suggests that, if anything, that deadline is going to have to move, or there's going to have to be some flexibility there. That would be a symbolic blow to President Shara. He's spent all these months since the downfall of Assad trying to unify the country, and that is one of the main stumbling blocks still to be overcome. It's also a real sore spot for Turkey, right? Turkey just over the border sees the SDF, a Kurdish-led force, as an extension of the PKK that Ankara fought on its own soil for several decades. If that integration doesn't happen, Turkey's already hinted that it could consider military action to dismantle the SDF. And if it weren't to happen, I think it's only going to strengthen the argument in some parts of Ankara for that.
Well, yeah, you've got the Turkish Foreign Minister, Patrick, accusing the Kurdish SDF of coordinating with Israel. Could that risk a different confrontation between Israel and Turkey?
Yeah, the timing was really awkward there, right? Just yesterday, Fidan, along with the Turkish Defense Minister and the top intelligence chief, were all visiting Syria, trying to present this united front and no doubt discussing things like the integration of the SDF. I think the reason that allegation is important and potentially escalatory is that it taps into this broader Turkey-Israel rivalry that's emerging in the region at the moment more broadly, right? You've got the Turkey backing the new national government, the new central government in Syria, which obviously emerged from the north. And then in the south, you've got Israel backing some Druze factions, where we've seen clashes earlier in the year, and also occupying some territory. So these two countries, powerfully armed, both of them, are literally facing off, over Syria through kind of proxy groups in the region. Those tensions in Syria, I think themselves, also an extension of the country's tensions over Gaza. Obviously, the war there in which Israel's been trying to destroy Hamas, and Turkey views Hamas as a legitimate resistance organization. So it's just another layer of tension between the two sides. I don't think we're looking at the possibility of outright confrontation between the two of them at this stage, but it is another front on which their kind of effective proxies are coming to literal blows.
All right, Patrick, really appreciate you bringing all that together for us. Patrick Sykes there, Bloomberg's breaking news editor out of Istanbul. We thank you. Now, for a look at some of the other stories we're following in the region. Israeli Prime Minister Benjamin Netanyahu has warned Iran of a very fierce response if it attacks Israel. Speaking alongside Greek and Cypriot leaders in Jerusalem, Netanyahu noted that Iran has recently been conducting military drills, adding that upcoming talks with President Trump will touch on Iran, but will focus primarily on the next stage of the Gaza ceasefire plan. And Iran's foreign ministry spokesman says its missile program is strictly for national defense and deterrence. He made the comments in response to an NBC report about a potential Israeli attack. The spokesman also said that Iran's missile program is not up for discussion in any diplomatic negotiations. Well, coming up, we'll turn to Africa. Nigeria's secured a $500 million loan from the World Bank to boost lending to small and medium-sized businesses. So we'll bring you that story next. This is Bloomberg. Nigeria has secured a $500 million loan from the World Bank in order to boost lending to small and medium-sized businesses. The lending giant says that the programme could mobilise nearly $1.9 billion in private capital and support 250,000 firms. Well, for more, we're joined by Bloomberg's Anthony Osei-Brown, who joins us now. Anthony, just walk us through how significant this loan actually is for Nigerian companies. Good morning.
Good morning, Z. Yeah, I think it's quite significant. 9 out of every 10 businesses in Nigeria are small businesses. You could do mom and pop shops and other forms of small business run mainly by families who depend on it to support their daily living and everything. So it's quite significant. They generate about 8 out of every 10 jobs in the country, and contribute about half of economic output, account for about half of economic output. So this is a significant sector that needs financing, and their biggest challenge is actually access to capital. research after research has shown that one of their biggest challenges is access to capital. So where any form of financing to this sector makes quite a lot of difference, because you're targeting about 50% of your capital base, 80% of your the sector that generates employment, and 90% of businesses, or more than 90% of businesses, but that don't have capital to expand or develop further. And that's basically most of them can't provide the collateral. Cost of funds is quite high, or interest rates are quite high in the 30s, and most of them struggle to get access to this capital. So this funding that is targeted specifically at them could make quite a difference for the economy.
Yeah, and of course the backdrop is tight public finances, and you allude to this, but how important is this kind of support then for Nigeria's growth outlook? How much of a difference is it going to make economically?
Yeah, so if you're looking at mobilizing about $1.8 billion for this sector, because the funds will also provide some partial guarantees to provide additional funding for the sector, and this sector makes up about contributes about half of your economy. And considering that the government is struggling with its finances, almost 50% of government finances goes into servicing debt alone. Another maybe 30 to 80%, actually almost 40% goes into funding personnel costs. So little is left over for funding small businesses or providing assistance to small business, either as grants or even loans. So this money coming from the World Bank will make a lot of difference, support a vital sector and help them expand growth, which of course is about half of the economy. So our economic output is likely to be strengthened if this facility is well implemented and supported. And a key part is also targeted at women-led businesses, and most of the small businesses are women-led businesses, and they are the ones that struggle the most to get access to capital. So when you get this loan and you direct it to women-led businesses, as you know how important women are to the society in terms of providing support to the family, that could make a lot of significant difference to economic growth going forward.
Okay, so gender equality as well as economic benefits. Anthony, great to see you. Thank you so much for bringing us this story. Anthony Osei-Brown there, Bloomberg's Nigeria Bureau Chief. Thank you. Well, coming up on the programme, another top interview of ours to bring you. The Bank of America CEO, Brian Moynihan, says that the US economy will be strong next year as companies ramp up their AI investments. We'll get you more on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in London. Now, Bank of America's CEO Brian Moynihan says that the US economy will be strong next year due to, in part, companies ramping up their AI investments. He spoke to Bloomberg about the new technology's growing economic benefits.
The AI investment's been building during the year and is probably a bigger contributor next year and the years beyond. And so if you look at the data center build out, which is one of the ways it evidences itself, that's a big deal. If you look at client spending, like us spending on AI, that's higher than it was last year. But frankly, overall spending levels are shifting towards that, not necessarily growing at a mid-single digit rate type of number. So I think that's part why the reason we feel constructive for next year. We think AI spending continues. We think there's benefits to the American taxpayer from tax rebates, lower taxes due to the tax bill going through and being effective for next year. And we think the expensing and other bonuses for businesses are good. So all that leads to our confidence that we go from basically a 2% type of growth level this year, plus or minus up to 2.4%, which is all due to that. And AI is kicking in more and more. And so it's not all attributable to AI, but that's having a marginal impact that's pretty strong.
So much of the American economy is supported by the consumer. And you at Bank of America have a really powerful viewpoint into the American consumer. How's the American consumer doing? Because it has been very strong. There have been some people saying it's starting to slow down.
You have to step back. We look at American consumers, 70 million consumers, putting $4.5 trillion plus into the American economy every year. And we've tracked the way that goes in the American economy for many years. And so in the third quarter, it was up about 5% over last year. As we look at the fourth quarter here so far in October, November, I'd say it in a 4.5%, which is very consistent with a very solid growing economy. You know, at the end of the day, it's going to work against wage growth. And we see in the underlying consumers we have wage growth, i.e. their paychecks are going up. And so the labor market's flattened out a little bit in terms of job growth and things like that. It's normalizing in terms of unemployment, but you still see underlying wage growth. So the American consumer spending at 4% more November this year versus November last year is a very solid backdrop. The credit quality of the American consumer is strong. And then you hear a lot about this discussion about different rates of growth among different income terciles or thirds. So if we look at the bottom third, middle third, and top third of American income people in the Bank of America customer base, we do see differences, i.e. the higher income and middle income are growing faster, but even the lower income third is still growing, and that's all good. And that means, why is that true? Companies are employing people, they're paying people. Now the labor market's got a little soft, and as we look forward at 4.5, 4.6 unemployment, that is gotten worse, so to speak, than it was at the beginning of the year. But frankly, this goes back to the normalization question. If you look at the 10-year average unemployment, the 20-year, the 30-year, 40-year, it's 5% and 6%, as you go back through time. And so a 4.5 to 4.6 unemployment rate is a very strong relative unemployment rate. It's just a lot of the years it's been below 4.5% has actually been in the last 10 years. So people are very used to numbers now, which were part of the tightness in labor in the 2017, 18, 19 era. Then you had the pandemic and it retightened. And so it's normalizing, but we feel good about all that, and the consumer's in pretty good shape.
That was the Bank of America CEO Brian Moynihan there on Bloomberg's Wall Street Week with David Weston. Well, in our last few moments here, let's check in on these markets. 2 sleeps to Christmas. It's a shorter trading week than usual, and the Santa rally does seem to be taking hold. You had equities erasing their December losses in yesterday's session. Futures pointing a touch lower, though, at the moment. That does it for Horizons Middle East and Africa. I'm Lizzie Burden in London. Do stay with us for Daybreak Europe. Oliver Crooks coming up next. This is Bloomberg.